Hello, this is the tradesight U.S. stocks and futures market preview and domestic economic data roadmap for the week beginning Monday, the 31st of August, 2015, ending on Friday, September 4th. One thing to note about the upcoming week that's very important is that we are heading into the Labor Day weekend here in the U.S. Monday the 7th, the following week. Following Monday is Labor Day. Markets will be closed. It's as late as Day can be in the year. It's traditionally the end of summer. It's the point where volume usually comes back in the market. Obviously, we've seen a little of that lately because of what happened the last week and a half. And that's good. It gave us something to do in August. It was very exciting. Um, but either way, we'll see what we get for this week heading into the Labor Day weekend. And we'll discuss the layout of the week in a moment. Let's take a look here at the ES. So this is the front month futures contract. This is so basically the S&P on a daily chart in futures form, which is sort of the best way to look at the market. And you can see there's a 10-day moving average. And that's the blue line that's moved down. We're almost there now. You can see from the day the drop started a week ago Wednesday to the low, if you look at the fib lines we've got here, we've exactly retraced to what's called the 61.8 or the 62% fib. That's exactly where we stalled out the highs on Friday. So that's a key level on a retracement and up almost to that 10-day moving average as well. So we'll see if we stall out there and start to head lower. Friday was a complete waste of time, as you'll see, compared to the rest of the week. Thought for sure they'd do something in the afternoon, one way or another. People not wanting to leave positions on over the weekend, either long or short, and instead nothing happened, and we ended up with a 1.7 billion share day, which is way back down. But anyways, I think those fibs were interesting. That's why I put them on here. I'm going to delete that for a minute and slide the chart over so you can see, after all the months that we talked about how flat this market has been, we finally rolled over here and got back down into areas that were under the low of last year. So here's the monthly chart of the S&P, generally speaking, and again, the 13 seeker sell signal that we got last. This is on a monthly time frame. Last November gave us that pink risk line. That's sort of the stop out point from the sell signal. If you get a close above that, we've been banging our head against that thing. February, March, April, May, June, July. A couple candle wicks trying to get above it. Never could get a close above it. We've been stuck. We talked about this over and over again. Eventually, that signal comes into play. When we head down, it happens quickly because the signal's on a broad time frame, and this is exactly what that gives us. And I will point out that the idea that this market pullback is over, I think is silly. I think we've gotten obviously a pretty sharp decline and a little bit of a bounce, but that's not usually how these things just end, especially in August. I still think that red line ultimately could come into play, or at a minimum, the 1600 support level that you see there very clearly on the chart. Nothing wrong with any of that stuff. It's just a pullback. Shouldn't bother us at all. 20% down to that 1600 level from the highs, basically 22% maybe. That's not the end of the world when the market's gone on the run that it has since the beginning of 2009. It'd be healthy. I'm sure the news would talk about it like it was the end of the world, but from any realistic perspective, I don't think it would be a bad thing. So what did we actually do on Friday? S&P closed up. Oops, sorry. Let's go back to the daily chart. S&P closed up a point. There's the S&P cash index. There you go. Closed up a point. The NDX closed up 4, so that's pretty tame compared to the wild whippy swings, and we didn't even have much of a gap at all. Stocks closed up 4, again very tame. Some of my alerts going off there. Biotech's up 26, back above the 10-day moving average. Google still lost 8, but it's recovered a lot of what it had lost already, so I guess it's allowed to do that. Apple back to 113 after it dipped to 92. Interesting. So that got us all the way down to the below the November lows briefly. And now we're all the way back at least to 113. Here's the VIX. Basically lost a nickel for the session, still up at 26. We did get the one day where we closed over 40. That's always the, when you get an exhaustion signal on the VIX, it's a close over 40. We did get that. That was the bottom day for now. That doesn't mean we're done for good, just because we've kind of bounced up here. Here's crude oil after those low closes down near 38. 2 big up days back to $45.27. That's an interesting bounce there. Notice it's coming just as the hurricane season is hitting. Here's a look at the YG contract. This is the gold gained 11 for the session. Take a look at the trend, closed at 1.11. 10-day moving average of the 1.11 of the moving average is 1.48. Sorry, on on the trend right now. So that's oh, it's obviously high. Let's just say that it's high for what we like to see. Obviously, a lower reading could give us a little more support for a downward move in the market, but we have not been feeling that as of late. The advanced decline ratio on the daily, 900 issues up for the session on net positive, meaning 900 more than down. On the NASDAQ, that's green. We were green on Wednesday, Thursday, and Friday from that perspective. And then the 10-day moving average of that is still negative 350. And finally, we'll take a look at volume all over the board here. Notice that the 10-day moving average of volume is now over 2 billion shares on the NASDAQ because we had a 3.2 and a couple 2.4 and a 2.5. And now we're all the way back to 1.7 here on Friday. But, Mondays and Fridays are typically the slower days. Obviously, this last Monday was not. And so let's take a look now at what we did in terms of the actual market action during the week. This is, we'll do it in the ES and 10-minute candles so you see the whole week. Yeah. So, compared to last Friday where we closed, we're actually basically, essentially even for the week, up maybe a point or two. If you look very carefully, or for the entire week after all this move, we're basically up a point or two. Isn't that interesting? The gap down on Monday, we recovered off of that, then came back towards the lows for the close on Monday. Gapped up Tuesday, sold off and filled the gap. Gapped up Wednesday, sold off, did not fill the gap and rallied. That gap may come into play. That's Tuesday's close. You're going to be wanting to watch on the next rollover here, the 1873 level, I believe it is. Gapped up Thursday, kind of wiggled around, tried to reach down later in the day and filled the gap. Couldn't do it, rallied late. Very small gap down Friday, and look how flat Friday is all the way across the board. We did fill the gap. Here's the NASDAQ futures. Basically the same gig, right? Look how flat Friday is. Jeez, look at that 13 sell signal Thursday right at the high. All right, so what do we have for the week ahead? Monday, Chicago PMI. That's it. It's 15 minutes into the market. Tuesday, by the way, the UK is closed, a bank holiday on Monday. So granted, we're talking about stocks here, but it can still slow things down a bit. That is a big financial hub, obviously. Tuesday, ISM index and construction spending, 30 minutes into the market. Auto and truck sales in the afternoon. For Wednesday, and by the way, so obviously Monday is the end of the month, so we're going to get some statement printing. So, remember, they could have rallied the market back up here to sort of get those statements printed and then let it cut loose again in September. Wednesday, MBA mortgage index, ADP employment change, productivity revised, factory orders, crude oil inventories, the Fed beige book. Thursday, here's where the real data starts to hit. Challenger job cuts, initial claims, that's the weekly jobless number, continuing claims, trade balance, a big number. All that could cause a gap. ISM services, natural gas inventories. Friday, non-farm payrolls and the unemployment rate, another big number. Keep in mind Friday, whatever gap that causes, people will be leaving early, heading out for the long weekend. So what's the focal point this week? As usual, Mondays are usually a little slow. Obviously, last Monday wasn't with the gap down. If there's some economic or the global news that causes something on Monday, okay. But otherwise, I think it's end of month. Maybe we're still a little flat. Tuesday, we start to get things moving because we're into September now. The statements are printed. So Tuesday, Wednesday, and Thursday could be decent trading days. Got a lot of data that's important on Wednesday and Thursday. And then Friday morning, some big data, but then everybody's heading out the door. That sucking sound you'll hear will be the last, everybody trying to not be the last guy out and have to hit the lights as we head into Labor Day weekend. And then we'll have a nice long weekend for everybody to enjoy. We'll be around in the lab helping you make money. Charts as usual brought to you by eSignal. If you have not taken a trial of our services, feel free to do so. We also have a special announcement coming this week, so keep your eyes posted. Join our newsletter or take a trial and you'll get the announcement when it's available. Have a great week and weekend.